So we own 100% of the Panton Palladium Nickel project up in the East Kimberley region in Western Australia. It's a pretty equal split between platinum and palladium in our total mix. We do have the highest grade PGM deposit in Australia, so much higher grade than, say, Chalice's high grade. So we've got about 3.2 million ounces palladium equivalent, grading at circa 4 grams a tonne, and that's within a broader mineralised parcel of 7 million ounces palladium equivalent as well. So we are imminently coming out with a resource upgrade, and it's going to be quite a meaningful resource upgrade there, and I think it's going to highlight the grade advantage that we do have at Panton. I think it is going to show that we're one of the highest grade undeveloped PGM projects globally. And it's also going to incorporate the significant chromite grade into that resource. And the reason that that's interesting is that it's the first time it's been done at Panton. Chromite is trading at a price of a circa $300 a tonne US. That's grown by 100% in the last 12 months. So it's going to be a significant co-product in the scoping study that we're going to follow that resource shortly this quarter. And so what that scoping study is going to show is a long life, low capital and high margin operation. And I'm confident that that's going to bring us into the throes of being the first PGM producer in Australia there. And that's not where the excitement doesn't stop there for us. We're also, as Danica alluded to, building a very enviable ground position in what is a burgeoning nickel copper PGE sulphide exploration district. IGO have been peeking around out there for the last 5 years. They are now exploring out there very aggressively. They think it's going to be the next Kambalda, and we agree. We recently optioned a bunch of ground out there, including a fairly mature deposit that hasn't been drilled since 2004, but a couple of the intercepts there are over 100 metres at close to 1% copper, 0.3% nickel and a 1 gram PGEs, and that's from surface Indian mineralisation. So that mineralisation's been proven across a strike length of 400 metres, and geophysics is showing that extends potentially another 2 kilometres there as well. So we're very excited to finalise that option agreement and get out there and get drilling. The PGM market, I think that the core growth driver there is really going to be the hydrogen industry. PGMs are the core pillar for hydrogen electrolyzers and fuel cell EVs. There's going to be circa $300 billion of investment into that hydrogen sector out to 2030, and that's on the back of the Inflation Reduction Act and the EU Green Industrial Plan. So that's going to be a key price driver moving forward. In the nearer term, the market is already in a severe deficit, so it's in about a 15% deficit or a million ounce deficit, particularly for platinum. And that's, the market pundits are expecting that to roll through to the price Q1, Q2 next year there. I think they're even easier tailwind for future metals on the macro front to kind of wrap your head around is on the supply side. So 80% of the world's palladium and platinum comes from Russia and South Africa. That Russian supply is predominantly heading into China. So that leaves the Western consumers with South Africa as their supplier of PGMs. It's not a particularly charmed investment or operating jurisdiction. The operations there are getting deeper, more expensive. They have perennial labour relations issues, and rolling blackouts have been occurring there for quite some time, even to the extent of being in a state of emergency up until a few months ago. The other thing to note about PGMs is that they're incredibly scarce. So particularly outside of Russia and South Africa, PGMs are about 10 times more scarce than gold to discover. And even when the price environment was much more favourable than it is now, you weren't seeing a discovery every other week, like you're seeing in the lithium and rare earth space. So that puts future metals shareholders in a really strong position, being the owner of 100% of one of the highest grade undeveloped PGM projects globally, and it's sitting in the top tier mining jurisdiction of Western Australia there. Panton itself is fortunately very similar to what they're mining in South Africa, so it's a reef style deposit, very similar mineralisation, same if not better grades, same if not better mining widths. So we've lent heavily on the decades and decades of flow sheet development and ore body understanding from the South Africans to work up our flow sheet. And so we've proven time after time that we can produce a very high grade saleable PGM nickel concentrate, as well as the chromite concentrate that the scoping study is going to envisage. And certainly the location is another big factor for Panton. So we're 1 kilometre off the sealed Great Northern Highway up there, 300 kilometres up to the deep water port of Wyndham. We're bookended by Kununurra and Halls Creek along that Great Northern Highway, where there's sealed airstrips, and there's a few operating analogues up there, being the Savannah Nickel Mine is just up the road, and it's been operating up there for about 15 years, and up until recently Argyle was operating there too. I think the other benefit of Panton and being an investor in Panton is the sunken cost into the project. When we picked it up in 2021, there'd been 35,000 metres of predominantly diamond drilling. We've still got all of that core up at site. There's an existing decline there of about 500 metres of development, 100 metres below surface. There'd already been a lot of flow sheet development to lean on, a lot of mine design. We're sitting on granted mining leases. And the replacement cost of all of that is circa $40 million, if not more, which is about 2.5x our current market capitalisation. So to I guess wrap it up on the capital front, we are well funded to deliver on this scoping study. We're ASX and AIM listed. We do pretty equal liquidity across both. So funded to deliver on that scoping study and beyond. I think once we get the scoping study out, it's certainly going to show that we should, and we will be attracting non-dilutive funding sources from government entities, particularly because of the criticality and the scarcity of the metals that we're going to be producing, but also attract attention from strategics now that there's something to help them contextualise the deposit that we're sitting on. So in summary, imminently coming out with a new resource. It's going to show that we are one of the highest grade undeveloped PGM projects in the world. Scoping study following shortly thereafter, which is going to show a long life, low capital and high margin operation. And then we've also got plenty of exploration upside, having that really strong land position where IGO are exploring heavily. We've got a mature deposit sitting outside our existing deposit, which is going to be potentially highly complementary when we wrap a resource around that as well. So if you like deep value businesses that provide excellent leverage to a market that is having structural supply constraints, then I suggest take a good look at Future Metals, and I'm happy to chat with anyone who wants to go into the business in more detail. Thank you.
So I did have a question, because you recently had Patrick Walter he's the ex-MD of New Century Resources, pretty serious guy, join your board. What value do you think he's going to bring? I know you didn't get an opportunity to touch on that. So. Yeah,
serious guy with serious credentials. He's a proven metallurgist, proven project builder in the Australian context. He came on board after 3+ months of doing his own due diligence, and he's really there to bolster both the board and the management team and help me take it forward after we deliver on this scoping study and mature the capital structure and the project at the same time.